Jason, I need your help, man. I need your help right now. I think somebody in my organization just clicked on something in an email and infected our entire organization. And I think it's ransomware. They had some crazy weird screen pop up, and it says that it wants us to send them Bitcoin through this private locker. And I need to go get some insurance right now. I need to get some cyber insurance today so that I can pay this.
Whoa, wait. Kevin, it don't work like that, man. You can't just go get insurance today.
What do you mean we can't get insurance today? That's what insurance is. It pays for your mistakes, right?
Yeah, but you got to plan for that.
I'm planning right now. That's why I called you up, man. I need your help to help me plan.
Let me help you. I'm going to help you. Tonight, we have a special guest that I'm bringing on just for you. This is the best I can do. He is going to talk about cybersecurity insurance. And he's going to help you understand why you can't just go out right now and buy some cybersecurity insurance.
Perfect. So what I'm hearing is he's going to pay for my mistakes, right?
Not quite, but you can try to get him to go there.
Well, maybe I'll learn something tonight so I actually know what I'm talking about cyber insurance.
Yeah, well, let's jump in it and see what he's got.
Let's jump.
Episode 8, Cybersecurity Insurance, Protecting Your Assets.
To purchase cyber insurance or not to purchase cyber insurance? Tonight, that is the question. What factors should come into play when you're trying to make this decision for your company or your organization? Is it worth it? What does it cover? How crazy are the premiums? How crazy are the deductibles? And what all's covered by a cyber insurance policy anyway? When is the right time to invest in cyber insurance? Well, we hope that question and many others will get answered in tonight's episode that we've creatively entitled Cyber Insurance, Protecting Your Assets. Are we creative with our titles? Jason, Are we creative with our titles?
We're super creative with our titles.
Heck yes,
man.
we are. Yes, we are.
Yeah.
So, Ross, thank you for joining us tonight. We appreciate you taking the time to join us on the podcast tonight. And we hope this is going to be an engaging and enlightening conversation for many people, because I know we're going to cover a lot of information. We're looking forward to hearing your thoughts on cyber insurance. And I know this is an area that you're very savvy and very educated in. So I'm going to start tonight by just handing it off to you and letting you tell us a little bit about yourself, your background, and what it is you do for a living.
Absolutely. Appreciate you guys having me. Excited to be here tonight. A little bit about my background. So my name is Ross Ingersoll. I'm based in Des Moines, Iowa, and I work for a risk management and insurance firm called Holmes Murphy, headquartered in Waukee, but we have 16 offices located throughout the central part of the U.S., so Minneapolis down to Dallas, over to Scottsdale, as far east as Peoria. Where I started my insurance journey, so to speak, was right out of college. I started at a large national carrier underwriting cyber insurance. And that was about 8 years ago, when it was wasn't very active. It was a very new insurance policy that not a lot of companies purchased, but when they did, very easy to obtain. Obviously, fast forward to today, things have changed pretty significantly. So really my role now at Holmes Murphy is to consult and advise our clients on how to best improve and position themselves heading into their cyber insurance renewals, best practices to mitigate cyber threats, so on and so forth. So looking forward to educating the listener base tonight.
Yeah.
Wow, 8 years. I didn't even know cyber insurance existed 8 years ago. I'll be honest. I thought it just started about 4 or 5 years ago.
Yeah, and crazy. I was one of those weirdos who went to college for insurance, never heard of it during college.
Wow.
fell into it right out of college, and yeah, it's been an interesting space to work in for sure.
Yeah, that's interesting.
Nice.
That's one of the things when you finish college and you start working, and you're like, oh my gosh, am I going to have to do this every day? When's it really going to get fun? And then all of a sudden, 8 years later, it's like hair on fire all the time, right?
Yeah.
You just never know what's going to happen. But I think it's interesting when we look at cyber insurance, and the reason why I think this topic was so important for us to do something on was for the reasons that Kevin just said. 8 years ago, a lot of us didn't, even if we knew about cyber insurance, many of us didn't care because we were sitting there looking at it from a perspective of, okay, so what are we really covering in a policy? And what's the likelihood that we're actually going to have to do something with it? 8 years ago was really low, so people didn't really worry about it so much. But the tides have changed, man, and now everyone's wanting to scramble to get some protection in place, and most often they can't get it. And so for us, I think we talked about this, and we thought it was very important to allow our viewers the opportunity to understand some of those little nuances about cyber insurance that might help them either obtain policies that they're going after or make a decision that they need to go to their board or someone else to try to get approval to move forward with it and know what they're getting when they do it, right? And so that was our goal. Going back on the importance for cyber insurance, and we've talked about it in terms of uh, how when you look at cybersecurity, the number of layers you have in place to protect yourself is very important, because we all say this: it's not a matter of if I get attacked, it's a matter of when I get attacked. And every layer you have in place is another layer of defense that you have in your bag of tricks to help stop something from going really, really, really bad. Well, guess what? When it does go really, really, really bad, there just might be one more thing you can do, and that might be cyber insurance. So that's what I think it's important for us to kind of grab out of this conversation, because people need to see this as another layer in their bag of tricks that they get, that they can have with them.
The layer of transferring the risk responsibility over to someone else, right?
Yeah, risk
At
transference.
that point, we've done everything we can do. We're screwed. Help us out.
That's right.
Yeah, absolutely. I mean, and that's really how we always approach it with our clients, is that, avoid, reduce, transfer. We call it our ART process. So, it needs to be a cohesive approach with that transfer piece on the very last leg of it. So once you take care of, the best practices, the implementation of multi-factor authentication, employee training procedures, then you can get yourself into a position where you're achieving, a comprehensive cyber policy that's going to do what it's intended to do, if that rainy day comes.
Yeah. So let's dive into this one a little bit. And I thought we should start with framing this up with a definition. And so when we talk about cyber insurance or cyber insurance policy, it's also referred to as cyber risk insurance or cyber liability insurance coverage. And it is a financial product that enables businesses to transfer the cost involved with recovery from a cyber-related security breach or similar events. Typically, the most important aspect of cyber insurance will be network security coverage, and this coverage will respond in the event of a network security failure, such as data breaches, malware, ransomware attacks, business accounts, and email compromises. And however, the policy will also respond to liability claims and ancillary expenses of an attack or breach. So that's the real general definition of cyber risk insurance or cyber liability insurance. But knowing that, I think, it would be good to set the stage on what does cyber insurance really cover for you and what doesn't it cover for you. So Ross, help us out with this.
Yeah. So with all the faults and challenges going on in the cyber insurance market right now, if you obtain a comprehensive policy, they are still exceptionally broad. And what I mean by that, you mentioned, a liability component and then just the risk component. So they're a hybrid policy that not only covers liability, which that provides defense and damages in the event you're sued by a third party. But that first party cost bucket of the insurance policy is frankly the most valuable and what gets used 95% of the time in terms of the lost dollars. What that covers is legal counsel to advise you through the breach or compromise, cost to hire a forensics firm, cost to notify individuals if there is compromised data. By far the leader in the clubhouse is the cyber extortion and ransomware insuring agreement, which pays for costs to hire that ransomware negotiation firm and facilitate payment of the ransom if it gets to that point. And then I would say a couple other huge components is business interruption, especially right now in the manufacturing and distribution and supply chain space, where businesses are shut down for an extended period of time because of a cyber attack. Your property insurance policy, your property policies don't extend to that. So you need your comprehensive cyber insurance policy to be structured in a way where it's going to pick up that bottom line impact that your business may incur if you're shut down for an extended period of time. Another area is social engineering fraud, which, I think we'll get into some claim examples later, but when you're tricked into sending money to a fictitious or fraudulent location, those are also very frequent events that we see that are often included in cyber policies.
So one thing I think with the people that I talk to most often, the thing that they recognize with cyber insurance the most is business interruption. And so it's good to hear you talk about all of the other components that are necessary and are also covered in a policy that you can have covered in your policy. But interesting enough, when you look at business interruption, are there caps in that business interruption in terms of how much you're going to cover in a policy? Because the challenge in there, right, is that you look today with the pandemic, and you've got businesses start to slow down, and there's a large amount of revenue loss because we're not, 2 years ago wasn't operating at the same rates that we had operated at before. And then all of a sudden, let's just say now you get hit with a ransomware attack that was happening at the same time, and you're spending time trying to rebuild your systems or put things back in place, and you can't service your customers, and you're down for a week or 14 days. Is there a cap in the amount that a policy really covers? And is it tiered?
Yeah, and that's a great question, because oftentimes with any insurance, not just cyber, the devil's in the details, which is why it's so critical to review your policy and making sure that you're being educated that it's doing what it's intended to do. So each of those different components of a cyber event that we just discussed have its own limit as part of the policy. And what we've seen really in today's society and threat landscape, if proper controls aren't in place, or if you're with a carrier that's not as strong in insuring cyber, they may look to sublimit business interruption losses. They may look to cap ransomware related events to a number that's significantly lower than the limit that you think you're getting from the policy. They may slap a co-insurance clause on it where instead of a $10,000 deductible, you're responsible for 50% of the loss, so to speak. So, while I mentioned, while the policies still can be structured to be very broad, there are times where if you're not paying attention, there could be cases where it could be severely limited. And that's obviously not a good situation.
Yeah.
That's interesting. I was reading an article the other day about some cyber claims and some cyber breaches, and some of the features, or I guess you would consider them features of a good cyber insurance policy, is having an actual dedicated cyber breach response coach to kind of guide you through the process of, okay, we've been hit. It's beyond a single machine. Now it's spread into my network, or maybe even, God forbid, to other locations. It's starting to impact operations, and we now need to get the professionals involved. Can you talk just a little bit to what that kind of looks like?
Yeah, absolutely, and you're completely spot on with that assessment of what cyber insurance can bring. So yes, it has the insurance dollars and indemnification that any insurance policy has, but frankly, what I see and what we always talk to our clients about it, with what is the most valuable aspect of it, is having that trusted vendor network already pre-established to assist you from start to finish of the breach. So, almost every robust or comprehensive cyber insurance policy or carrier will have a 24/7 breach response hotline that you can dial into if you're ever suspecting that you're going through an event. From there, they really quarterback it and triage it on your behalf of assigning that ransomware negotiation firm, assigning forensics, assigning a legal counsel. And it's really just a web of reputable and top-notch firms that gives you the peace of mind, so you're not left scrambling, trying to figure out how to handle it all by yourself, or Googling, who should I call to get me through the event. So oftentimes, it could be viewed almost as, the premium that you're paying could almost be viewed as, a sort of retainer to get access to all these different vendor firms.
Yeah. And I've even heard that, like the FBI and CISA and companies like that are branches of governmental offices, they offer free protection for some types of breaches. Is that true?
Sometimes, yeah. Or
at least advice, maybe not protection, but like free advice or free assessments and things like that you can reach out and have them participate in.
Yeah, free assessments, we have seen that, especially with if you're going through an attack, you want to make sure you're not paying, an organization or a country on the OFAC list, which could then lead to more fines and penalties or further issues for your company. So there are tools and guidance out there that companies can access, outside of the insurance policy.
The interesting thing about this conversation, right, is, and Ross just said this, when you're paying for that policy, one way to think about it would be that you're paying so that you can have access to the experts when you need it. And you have an organization that's going to quarterback, pulling in all of the experts to give you guidance through this issue. And that'll be, because that's what they're trying to do, is they're trying to bring in someone that can help you be successful in the end. And they're going to bring in the right cybersecurity firm. They might bring in someone to do forensics. They'll, look over and give you advice about, what your next steps are. And all of those pieces are important when we go all the way back in the chain to some of our earlier episodes when we talked about ransomware and ransomware breaches. And what are the first steps that you need to do? The first step is don't start turning your machine off or trying to wipe it and put a new version of Windows on it as you think that was your backup plan. Just get on the phone if you have cyber insurance and call them up and say, hey, I've got a problem and I need to kick this thing off and I need some help. And then let the process start taking place, because you're going to get the best amount of guidance going forward after that.
Yeah. And you're dealing at that point with essentially a virtual crime scene, right?
Yeah.
So you can't just start recovering your systems without thinking about the forensic side of things, which is critically important if it does come to, God forbid, you have to file a claim through your cyber insurance company. If you've tainted that crime scene, there's an out for the insurance company at that point.
Yeah.
And you want to be mindful of what you can and cannot do through that chain of custody. Got to be careful with that. Okay, well let's move on to the second topic, Ross, and that's really trying to determine if cyber insurance is it for me or is it for my company? And I know there's a lot of factors that play into that. There's a lot of variables there and a lot of things you need to consider, like what industry are you in and what's the size of your company? What's the cost of the insurance? Can I afford it? Does it make sense for me? Am I global versus just a independent single location type company? Because that's going to impact the cost. You got to think about what's covered, what's not covered, deductibles, premiums, laws, regulations like PII, PHI types of data that could impact it. That goes back to what industry are you in usually.
Yeah.
And then, at what point do you determine, how much coverage do I need? So the question is kind of this. If I came to you and I was looking for an unbiased opinion, let's say brother-in-law to brother-in-law, we're standing over the grill, drinking a beer, and I come to you and I say, hey, if I was considering cyber insurance, what guidance would you give me and what steps would you tell me to take to determine whether or not it makes sense?
Yeah, and it's a great question, and risk and exposure varies for everyone, with a lot of the variables you just mentioned. So what's your industry? What's your data risk? What's your regulatory risk look like? Whether it's the various data that you're collecting or areas of the country or world you're operating in. So especially in the U.S., each state has their own privacy laws that you have to adhere to. If you're a global company, GDPR and Europe has their own. So it really depends. Maybe just to simplify it, what we're seeing, especially in today's world, you always think about data risk when you think about cyber, right? So are you taking credit cards? Are you collecting PII?
Yeah.
That's certainly a risk, and that elevates your cyber exposure. But going beyond that, if you're relying on technology in today's world, that's a huge cyber exposure right there, because if you get hit with a ransomware attack and the way that they're carried out, it shuts down your operations or your ability to utilize and leverage technology. We talked a lot about business interruption already. If you're disrupted because of that cyber attack and you're no longer able to rely on your technology to operate your business or manufacture products or participate in the supply chain, what does that look like for your bottom line? What does that look like from third-party exposures where you could face lawsuits because you're now impacting third parties? We're seeing that huge shift from cyber always being thought of as a data risk, where now it's really an operational risk. So if you're heavily reliant on technology, whether that's like an insurance brokerage where we're just communicating and using computers and systems all day, or if you're a manufacturer where they're adopting AI and machines that are now interconnected, that opens you up to more and more cyber exposure.
Yeah, that's a good point too. It's not so much anymore about what is being taken from you, but also what they have crippled your organization to down to, and how that's impacting you.
Yeah, especially with ransomware now being so huge and as big as it is, those threat actors have a lot more leverage, shutting you down and holding essentially your operations hostage versus, hey, we have 500 files of data.
Yeah.
The reality is, most data has been compromised. Unfortunately, it's almost an unfortunate reality. It feels like, but if they can shut you down and hold you hostage for a couple of days, that bottom line impact could be significant. I mean, we saw that with Colonial Pipeline when they were shut down for 5 days at a time, and what that did to the East Coast fuel supply.
Yeah, just 5 days. That's a good point.
Right. So seeing that the ransom demands and how they're using that as leverage versus operational risk, that's probably the biggest thing that we talk about all the time when we're helping our clients evaluate their cyber risk.
Yeah, that's interesting. I sat through a presentation earlier this week, actually, by the FBI and Homeland Security, and one of the things they mentioned was the internet. The minute your company is connected to the internet, now you've opened up that risk. And so, if you could operate your entire business without ever touching the internet, you're basically eliminating most of the risk. If you think about it from a hacker point of view, right?
Yeah.
People could still, use social engineering to sneak in a back door of your building and implant a USB chip or something. And, if they wanted to use more traditional methods of trying to hack into your systems, but really it's all about the internet. If you're connected to the internet to run your business or do any part of your business, whatever that may be, you've now introduced risk into your environment, and you may need help from others to mitigate some of that risk. And that's where cyber insurance really comes into play. The other thing you mentioned there, Ross, which I kind of want to touch on, is you mentioned the regulatory laws and everything in GDPR. With GDPR, you said states have their own regulations. Are there any states in the U.S. today that are actually more rigid with their rules or more rigid than GDPR? Or could you use GDPR as a baseline for pretty much everything here in the States and kind of be covered?
Yeah, so California, of course, California being, the state.
They're always the first. California and New York, right?
Yeah.
Yeah.
And those are the two that have kind of led the charge with privacy laws stateside.
Yeah.
So CCPA is the California Privacy, California Consumer Privacy Act that just came out 2019 or 2020. And that was really modeled after GDPR. New York has a similar law. BIPA, which is Biometric Information Privacy Act, that's a hot topic in Illinois. So there are variations of certain privacy laws throughout the states. And what's important to keep in mind for businesses, it doesn't necessarily matter where you're domiciled. It matters where you're transacting business and potentially accepting information. So if I'm in Iowa, but we have customers in California, we got to make sure we're compliant and adhering to the CCPA. And and since there's not a uniform law in the U.S. similar to GDPR, at least, that can introduce, a very, web of confusion for businesses.
Well, it's very confusing. And that's a very important point, too, because if you're a global business or if you're a retailer, you have no idea of knowing where somebody's going to come into your website and make a purchase. You have no clue. So if you're running a retail shop online and you're selling anything that's open to the entire world through the internet, you're basically at risk of something in GDPR or anywhere else coming back to bite you if you're not adhering to every single aspect of their rule set and their laws, because someone over in the UK purchased one of your products and God forbid your company gets breached and their information leaks out, their PII, you're responsible for that. So it's very important that the listeners or anybody that is curious about to what degree do these laws and regulations actually have reach, that everywhere. If you're doing business in that country, you're at risk and you need to adhere to those laws, period. Or
absolutely
limit where you do your business. That's the only other option, right?
So a question that's coming up for me as we're talking about this would be, and really it's coming up for me because of my background in cybersecurity, but when your customers come to you with the question of, okay, help me understand how much I should try to cover, how often are you using calculations like single loss expectancy and annual loss expectancy and helping them arrive at that? Or is that something more that you're expecting them to do and bring to you and say, okay, this is what I think my coverage should be?
Yeah, so we certainly tap into loss analysis type tools in peer purchasing data to provide that perspective to our clients of, hey, 70% of the time, a $5 million limit is going to be adequate for you. 30% of the time, it may exceed that. So are you comfortable with that risk reward? I mean, you certainly don't have to go insurance broke. You don't need just to buy as much as possible, because at a certain point, there's diminishing returns and it just doesn't make sense. So arriving at that appropriate limit where, you feel comfortable with it, but you're not over purchasing insurance. It's our exercises that we walk through with our customers. Hey, you don't have to do what your friends are doing, but other, large manufacturers of similar profile to you, similar, footprint of operations, they purchase X limit. And here are the various, limit options for you. We usually go through a couple of different limit options, deductible options. So there are different levers that you can pull to influence premium and price. So certainly talking through loss analysis and peer purchasing is always insightful perspective.
Yeah. So Kevin, if you remember in the CISSP, one of the concepts is, which I think it's important to speak to, if you are considering trying to get a policy, you should know what you're trying to cover, and bringing that information to you guys ahead of time could be beneficial for you to do your analysis, as well as a customer to be able to do their analysis and say, okay, this is where I think we land. Because a single loss expectancy calculation is basically the asset value, what you think you have, and what the factor of impact might be, what that risk impact might be. And then you take that and you say, okay, so I think that I might lose X if I get attacked, and I'm likely to get attacked like this and lose that amount X amount of times over the next 3 years. You take that and you can then factor out what your high end and low end values might be of what you should insure. Now, it's not going to be everything, because you have other things to consider, like business interruption, replacement of equipment, claims filed on you from your customers, right? Those things all have to be factored in as well. But, those are some key aspects that I think, our viewers need to remember that they should consider as they're trying to put these puzzle pieces together.
There are certain things you can do right headed into preparing to get a policy or apply for a policy, and there are a lot of things you can do wrong. So I guess, Ross, let's first talk about, if you're a company, large or small, and you're going to look into cyber insurance, what are the bare minimum things that you need to be thinking about before you even pick up the phone?
Yeah, it's a great question, and something that, I meet with our clients on a daily basis on, because it's really taken a turn swiftly and significantly over the last 12 to 18 months. So really, even backing it up, I mentioned at the top, I spent 6 years almost underwriting cyber insurance when it was really in its infancy, and not a lot of carriers really understood what they were getting into. So, they saw it as a kind of a shiny toy in the insurance marketplace, looking to get market share and write it really at all costs. So, I was looking at a one-page application, and if a company had antivirus and firewall in place, they could qualify for the broadest coverage, cheapest price. The marching orders are go and write it. Let's grow our book. Obviously, hindsight, looking back in that was a terrible idea, because that really got the cyber insurance carriers' loss ratios up. Yeah, right.
You don't say.
So what was a sleepy, profitable line of business for insurance carriers became very unprofitable very quickly. And then as they're getting these losses in, they had actuarial data to really figure out what was causing losses. So really fast forward to today, there's been a huge recalibration, not only in pricing and how the policies are written, but really how they're underwritten and what it takes to qualify for those policies. So it's no longer antivirus and firewall anymore. There's pages of pages which are difficult to
Yeah.
to sift through, but there are really 5 or 6 things that I would say, broadly speaking, almost every single carrier looks at. Multi-factor authentication is by far the leading indicator to prevent ransomware losses, and as such, almost every single carrier requires 2-factor authentication for remote access, access to email through web apps or on non-corporate devices, and then MFA for local and remote for domain admin users. So your IT and privileged users within your company, they have 2-factor authentication, whether they're logging into the network remotely or internally. So that's 3 things right there, but they all have to do with multi-factor.
So you know what I think you guys do? I think you guys have an intern that you pay that's sitting in the back of the room just going chicka, 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 coming up with all these questions, and they bring you the sheet and you're like, is this good enough? And you guys say, no, go back and add more on the list. And so they go back and add more on the list, because every year I get that list and it's like 4 pages longer than it was the year before. I'm like, come on.
Yeah.
Yeah. It was the, I think for this year's was like 10 pages. It went from like 2 pages the last time.
Crazy. It's difficult to keep up with, and every carrier has their own applications and their own set of requirements. So as a broker, we're really the middleman between all of the insurance carriers and policies that a company would have access to in that business. So our job is to really communicate, all right, there's a lot of questions on here. Here are really the top 5 or 6 that you should be focusing on and honing in on prior to going to the insurance marketplace. So MFA, those 3 that I just mentioned, endpoint detection and response is a huge one right now.
Containment.
Employee training is obviously huge. Most events start with some sort of human error, so you can have all the best software security or policies and procedures in place, but if your employees aren't trained to have heightened awareness of business email compromise schemes, that's a huge exposure for all businesses, and all businesses have employees. So, and then robust backup and recovery procedures. So MFA is a leading indicator to prevent ransomware. Backup and recovery procedures are really the best way to mitigate it in the event you are hit. So are you able to restore from backups, to leverage yourself in those ransomware negotiations, to get out of paying it altogether or significantly lower?
So when you look at the changes that were introduced because of COVID, and you have more people in a remote workforce role, has things like VPN access with MFA come into play? Have you seen that type of change happen as a result?
Yeah, definitely. So I would say, VPN was a best-in-class control, 2 to 3 years ago. So if you had a VPN for remote access, that was really an ideal scenario from a cyber risk mitigation perspective. Now they really want to see MFA and VPN, ideally for a best case.
Sure, definitely. All right, so guys, I thought as we start to wrap this up, it'd be fun to do a game we called the Cyber Claim Game. And in this game, you like that? That was my talk show host voice. So the Cyber Claim Game.
That's epic.
And in this game, what I'm going to do is I'm going to go through a scenario of a breach and give you some numbers, look at what the impact was on this breach, and then I'll call on you guys to kind of give us some of your thoughts around what that organization could have done differently in order to mitigate this issue. All right?
Okay.
So Ross, I'm going to start with you. And this one is a medical group. And so
wait, can I give you the answer to all of them?
Yeah, what's the answer, Kevin?
Fire everybody. and disconnect from the internet.
Yeah. Get rid of your internet connection and never use it again.
That would work,
Yeah,
right?
Yeah.
All right. So did I win the game?
No, you
Do
did.
I get a prize?
No, that wasn't good.
Oh, okay.
No.
All right.
So
I'm sorry. Go ahead.
So Ross, we're
Go
going to
ahead.
start with you. And the first one, so an employee at a medical company was a victim of a phishing email attack. And they clicked the button that they shouldn't have clicked. And when they did that, the hacker gained access or it planted malicious code, and that's malicious code executed on this healthcare network and exposed names, addresses, dates of birth, medical record numbers, the medications that their patients are on, their diagnosis. I mean, all of their information for 1,200 patients in their network. So they freaked out. They ended up calling a computer forensics expert, and that person came in to determine if PHI was compromised, and they said, "Yep, you messed up big time. All this goody PHI data is now in the hands of the hacker." And so then they really started freaking out. And so the medical group was notified that the affected individuals, those 12,000 patients, had hired a public relations firm and effectively did a class action lawsuit against them. And the Office for Civil Rights launched an investigation against the medical group and then ended up fining them. And as a result of having HIPAA violations. So they were pretty much screwed. Now, if we look at the cost of all of this stuff, I mean, they ended up having to pay for this crisis management negotiator. They had to pay for the investigation to happen to determine what was lost and what wasn't lost. And then they had all these fines and penalties that were on their plate. And they got out lucky. They only had to pay a little over $500,000, $590,000, right?
Oh, that's
it. They got out lucky. Now, looking at the severity of this, what might they have done differently to mitigate this? What do you think?
Yeah, so certainly a couple things come to mind. I mean, the way the story opened up there with an employee clicking on a link, I know that's come up a couple times through this episode about how important it is to train your employees to have heightened awareness of cyber threats and schemes. So implementing a specific phishing training program could have certainly gone a long way here to avoid it in the first place.
Yeah.
Another facet of this that we caught was the antivirus really failing to do its job, it sounded like. So, having a more frequent vulnerability assessment or penetration testing could have potentially factored in there to help prevent the event as well. And then, having an incident response plan, I'm not sure, sounds like they did follow some steps, but I heard a lot of panic in there and calling X and Y. If there's a more formalized triage, it could have helped avoid those lawsuits if they really got on it from the jump. I'll throw a bonus one in there too, since it's the theme of the podcast episode, is an insurance policy could have helped assign that forensics firm defense counsel to defend from those lawsuits, facing the fines and penalties of the compromised data, so on and so forth. Could have helped insure against those costs that they ended up facing.
Yeah, I thought of that too when I was reading that and explaining this issue to you guys. That's a good one. They could have had more structured response to this issue by just having a policy that included that quarterbacking work for them. And maybe they wouldn't have ended up doing the $500,000. Maybe they would have ended up, not having to pay anything if they were lucky. Who knows?
I think it's often underestimated how valuable that can be, especially in the heat of the battle when you've already been breached and you're doing everything you can just to keep the business operational while you're recovering from it.
Yeah,
That's huge.
Yeah, the time
That's
to think
huge.
about it isn't when you're freaking out because you were attacked.
No, not at all.
All right, Kevin, I have one
Yeah.
for you. All right, this one
Okay.
is a construction company, and they
Okay.
got offices all across the country. Okay. Now, keep that in mind, what we just said. And Ross spoke to this earlier about regulations in other states and things to that effect. Okay, so this construction company
Okay.
used a third-party cloud provider to store their customers' personal information. And the cloud provider suffered a major breach. I mean, big time. Stuff went down, leakage everywhere. And in this breach, it compromised personal identifiable information that belonged to thousands of the construction company's customers. And it crossed customers across several states. So the owners of the data, who were this construction company, had a legal obligation to provide adequate and timely notices to all of those people whose data was compromised, breached. And so they did that, and the attorney generals in multiple of these states that these customers lived in started to instigate regulatory investigations against the company. So as we talked about earlier, these states all have different types of regulations that a company might have to follow. Man, they were fighting a lot of different things coming at them from these different states, and you could already imagine that they were going to have a pretty good legal team on board to understand all of the nuances of the different regulations that these attorney generals were going to come at them with. So the construction company didn't have any document retention policy, zero. And most often the reason why is because they're like, that falls into my cloud provider. My cloud provider has that covered for me. That's the service I'm paying them for. Wasn't the case. That's a key issue in knowing where the line is of what you're obligated to follow and what's on your cloud provider, service provider to have to cover. And they got that one wrong. And so what they ended up doing was notifying all their customers, and they had to end up paying money for this breach on behalf of their cloud provider screwing everything up. So in addition to that, they had to pay their defense costs associated with defending themselves against, these multiple states attacking them with all the fines. In a nutshell, they paid close to $1 million. So they had attorney fees, they had regulatory fees they had to pay, they had to also do crisis management and pay for people to help organize that, and it came out to be about $862,000 when it was all said and done.
Yikes!
All right. So what might they have done differently, Kevin?
Well, I go back to what I said originally. Just fire everybody that works for you and then disconnect your company from the internet and go home.
Yeah.
And you're good.
Yeah.
You're good.
Yeah.
No, seriously. Well, first of all, it's important that you know, both internally and externally, what sensitive data you're trying to protect. So one of the first things that they could have done better is map their sensitive data and know where that confidential data, PII data and things like that, where it resides, both in their own network and abroad on their cloud-based vendors. A lot of people underestimate that the fact that when you take on a cloud-based vendor as an extension of your business, that liability comes back to you, not to them. So even though they're a partner of yours, even though they're managing the servers where that data is stored, if they're not doing their diligence to protect that data, you go ask GDPR, they're not going to care that how the breach happened. Your customer's going to come to you,
right?
And they're going to say, you were responsible for our data and you chose this cloud vendor, so ultimately you're responsible for that breach, as sad as that is. So that's the key thing. Map your data, understand where your data resides, and make sure you're protecting the data as it needs to be protected. And that means know what your vendors are doing, monitor their security controls, and look at the fine print in your contract with your vendor to make sure that you understand who has that data liability. Ultimately, it lands on you. It's going to go back to you. But you need to structure that contract to protect yourself.
So, Ross, you think that their cyber risk policy would have covered this $862,000?
Yeah. So the cyber risk policies, are pretty broad where it protects the data that you're liable for. So Kevin just went into that, right? So, it doesn't matter where necessarily the breach or compromise originated. If the company is liable to keep that data safe, that's what the insurance policy is there to protect you from. So, it certainly, I would have envisioned it responding in this scenario if they're buying the appropriate and comprehensive cyber insurance policy.
Yeah. Kevin, you got it wrong.
Sure.
The answer was get some cyber insurance.
Darn it.
No.
Well, I tried.
No.
I tried.
No, that's the last line defense, remember?
Yeah. It's definitely another layer of your security posture.
Yes, most definitely.
For sure.
All right, I got one more. So, Ross, this is for you. A clothing and accessory manufacturer. Okay, they have an online website, and man, they also have a storefront. But they got an online website, and they make half of their revenue on this online website, and they're growing it too. I mean, they were really starting to make some bank off of it. Well, their site got breached, and it went down. They couldn't make any money off of it anymore. Then the FBI notified the company that a hacker that they had arrested had credit card numbers of 500,000 of that company's customers in his possession. So likely he got it from them, but not necessarily, because he could have bought them off the dark web off of the original hacker that did it. But he has access to over 500,000 credit card numbers that came from a breach from this website. And so they hired a forensics investigator, and they determined that the cyber criminal had compromised the online shopping carts over a 6-month period. So this guy was just going in and making bank, grabbing credit cards, going and using them, and just, and they didn't know about it for 6 months. The hacker was able to not only do that, but the hacker was able to steal the names, the addresses, the credit card numbers, expiration dates, the security codes on the back of the card, and the email addresses of all 500,000 of those customers. And most likely went on the dark web and made even more bank off of it. Now, the payment card industry agreement required that the manufacturer hire a certified forensics investigator to examine the company's systems and their related infrastructure. And the company incurred significant costs as it was associated with this, because there was a lot of things they just didn't do right. In the end, they had to hire a public relations person to rebuild their brand image. They had to hire for multiple forensics teams. They had to pay fines. And all in all, after they were all in legal expenses, and when they were all said and done, they ended up paying $10 million, over $10 million as a part of this thing, right? And when you look at this, right, and you look at the impact of something like this, it was just an online site. Maybe they did a few things wrong, but this impact cost them a significant amount of money. What do you think they could have done differently here?
Yeah, so there's one similar theme in this one as to the previous one, and that's that regulatory environment that we touched on a couple of times. So, especially ramping up online retail where you're transacting credit cards, that opens you up to PCI, so the payment card industry. So making sure you're up to those standards relative to the amount of transactions you're taking in, because there's different tiers that PCI lays out, and different security levels that you need for each of those tiers. So making sure you're frequently and consistently maintaining compliance with PCI and other regulatory bodies for that matter, to make sure you're not growing too aggressively that opens yourself up to a large amount of risk and exposure. Really along those same lines, that PCI often lays out, especially for a company like this that would be transacting so heavily, it would be end-to-end encryption of those credit card transactions. And then the last one, especially with these companies that are growing so fast and getting in new elements of their business to grow, it's really important to either employ or contract out through a third party a chief information officer or network security officer. They will help you navigate those different waters that you're getting into for the first time. And maybe one area that we haven't touched on as much through this episode, but something that's really important, is reputational harm is really everything and such a huge part of our society today. So if you're getting into these new areas and you experience a significant breach and you're harming consumer confidence, what does that happen to your brand and really the longevity of your company? Chief information officers, you just think IT, they'll handle the tech stuff of the company, but cyber threats have really evolved into reputational risk and a huge balance sheet threat, and that's where really a robust management style of taking it seriously can go a long way for any organization.
Yeah.
Wow.
It's good stuff.
So I know we're long, but I'm going to throw this quick question out there, and I hope it's not going to drag us into 2 hours here, but I am very curious about it. I know when GDPR kind of became more mainstream, and that probably happened five or 6 years ago over in the UK or the EU. It was discussed that it was going to be a requirement for any company operating out of the EU to appoint someone to a newly created C-level position over there, officer level position anyway, a data processing officer. And you're starting to hear rumblings here in North America about companies, especially publicly traded companies with shareholders, that they're thinking about making the C-level, the CISO positions a requirement for some public companies. And I don't know if that would be based on the size of the company or the industry you're in or what, but are you starting to hear things like that in your line of work as well?
Yeah, I think that's certainly where we're trending, especially, cyber is not only just the IT people's concern anymore. It's really an organizational concern, organizational threat. And that really starts from the top down. So identifying a leader in that C-suite to take control of that, create and foster that culture of network and information security is the best starting point for any organization, because if you're getting buy-in from the C-suite, that trickles down.
Sure. And it also helps to have someone with some level of cyber knowledge serving on your board too, if you're public.
Absolutely.
To keep your C-level security folks in check.
And avoid that $10 million hit to your balance sheet, for sure.
Yeah, for sure. Sure.
Guys, this has been good stuff. And we covered a lot of content. A lot of content. And I think when we go back and look at it, we're going to have a lot of recap information that we're going to post up there for our audience that will be takeaway information that they can use and even refer back to. I do think that, it's great when we can have these level of conversations around topics that can help someone make better decisions in supporting their businesses. And I think throughout this whole conversation, we were able to do that. We even use examples that highlighted what the worst case scenarios could be and how that it could impact you and what it might turn into. And because of those reasons, you might want to consider cyber risk insurance as your last line defense. So I'm grateful that you were able to be on this episode with us, Ross, and the conversation was great. As usual, we get into a conversation on something and we go a lot longer because the information is so good. But
that's not your fault. That's our fault.
That's exactly right. But needless to say, this has been a really good one. And I think when we're all said and done with this, I personally am going to come back and look at this episode multiple times to think about, best practices that I can share with other people and become better at, making good decisions around insurance.
Yeah, definitely. I really enjoyed it, and I appreciate you guys having me on.
Yeah, absolutely. Well, thanks, Ross. And to all the listeners out there, stay tuned next week. Next week, we'll be bringing you an episode on badge life, an area within the world of DEF CON that if you've ever visited DEF CON, you probably know about badge life. So join us for that. That episode is going to be awesome. And we'll see you then.
See you guys.
Cheers. Hello, everyone. If you enjoyed the podcast today, I'm excited to share with you that you can now listen to us on all of these major streaming platforms. Also, if you learned anything from the conversation today, please share this episode with your friends, family, and colleagues. The more of this knowledge we can share, the more cyber secure we all become. I'd say like, subscribe, and all of that jazz, but hey, you're not morons. You know that. I will leave you with some words of wisdom, though, from the former director of the FBI, Mr. Robert S. Mueller III. He said there are only two types of companies, those that have been hacked and those that will be hacked. You guys be safe, remain diligent, and take care.